Good afternoon, traders. Welcome to the More Analytics Afternoon Energy Podcast for February 27th, going into Monday. Okay, we're starting off with natural gas. Didn't quite leave a gap open higher today. But nonetheless, we're holding exhaustion below. Trade below 383 has brought in $5.5 of pressure. Number of other bearish calls in here. This one here, the trade below 339.20, I said projects this downward 240 ticks minimum, 400 ticks plus maximum. We've seen 617 of that so far. And then the recent trade below 291.60 projects this downward 250 ticks minimum. That's going to be shaved 240. We've seen 141 of that so far before holding this exhaustion level down here at 277.40 with a 277.50 low and rallying up to 289.40. Excuse me. Decent trade above this formation up here, which comes in at 293.90. Plus 0.4 of a tick per hour starting at 6 o'clock p.m. Sunday. That'll warrant decent strength. If we come off to take out this exhaustion level down below, we'll probably test this lower one down below at 269.40 to 268.50. A maintained gap higher on Monday would also leave a minor bullish reversal below. Okay, in the crude oil, we held exhaustion below with a 54.89 low, and we've rallied up to 67.83. We had a number of bullish calls in here. I'm not going to go over all those. And then the trade back above 65.01 right here. We briefly gotten bearish yesterday with the break below a formation in here and breaking below here and here. And then we got bullish again with the break back above 65.01. And then again above 65.45. And then the trade above 65.44 brought in pressure, strength up to 67.83 before rolling over and bouncing off the line. Decent failure below this formation is going to warrant decent pressure again. That's going to come in at 66.32. -1 per hour starting at 6 o'clock p.m. Eastern Standard Time. Now, I would keep in mind, I know this made new highs today, and I'm going to jump around here for a second. The April also made new highs here after breaking above a formation in here. The March, which came off the board, did not make new highs. And like I said, on this major formation on the weekly charts, we had broken above here and then failed back down below it, which I said would warn of substantial pressure, likely for days/weeks. But we came off generally from the 269 area down to the 252.50 area, which was a pretty substantial move, and may see more as that rolls into, actually, excuse me, that is not accurate because this rolled into the April today, which had a spread differential anyway. That's why this is showing lower trade. Whereas the March just chopped sideways here. But nonetheless, it does roll into that, and the April is below that. So, and we may be yet in still in another last leg up here, but it's not as clear on this stretch. So anyway, okay, back to the unleaded gasoline or RBOB. We held exhaustion below at 191.84, and we've bounced up to 230.75. a number of other bullish calls in here. I'm not going to get into all of those right now. Just want to check something here. Decent penetration in the RBOB was 124 ticks today. Okay. So in the RBOB as well, we had broken below this formation here, broke below it, came back above it, which got us bullish again, rallied up here, pulled down, didn't hit the stop, and then took out this formation above at 282.20 plus 2 per hour, and then failed back down below it, which now warrants pressure despite settling higher. That line is going to come in at 228.40 plus 2 per hour starting at 6 o'clock p.m. Sunday. Bear with me a moment. And decent penetration back above that line will negate the bearishness and reestablish the bullishness from other calls below. And a decent penetration back above that line is going to be 160 ticks up until Monday's 9 o'clock open. Further break below this line would also be bearish. That's going to come in at 225.25 plus 3 per hour starting at 6 o'clock p.m. In the heating oil, we held exhaustion at 202.76. We're valued up to 261.83. A number of other bullish calls in here. I won't go over all these right now. We had also broken above this formation right here, rallied, pulled down almost to the stop, and then started rallying up, rallying again. If we were to fail back down through that line decently, that's going to warrant decent pressure. That's going to come in at 253.03. Minus 3 per hour starting at 6 o'clock p.m. Sunday. And a further break below this formation right here, which is going to come in at 250.72 plus 5.3 per hour. That will project this downward another 10 cents plus. In the Brent, trade above 59.69 is now brought in strength up to 73.54. A number of other bullish calls in here. One of them is right here, 65 above 65.32, projects this upward 80 ticks minimum, $7 plus maximum. We've seen over $7.29 from that, from 65.32 trading up to 73.54. And we had gotten bearish briefly below here and then broke back above this 702, 70.28 level, the 70.28 to 33. And that has brought in strength back up to 73.54. Okay, in the gas oil, we held exhaustion with a 596.25 low, and we have rallied up to 750.50. We also broke above numerous other formations in here. One to note would be the break above $709.25 projects us upward 50 minimum, 170 plus maximum. So from 709.25. So far, we've traded up to 750.50, attaining about 40 or so of that 50 minimum. We'd also broken above this formation and this formation. If we were to fail back down through this formation decently, that's going to warrant a decent pressure. That's going to come in at 736.67. +5 per hour starting at 6 o'clock p.m. Eastern Standard Time, Sunday. A decent trade back below there, which is going to be 8.25 up until Monday's 9 o'clock open, will warn of decent pressure. And going into Monday, the heating oil is a strong horse out of the three, the RBOB the weakest, and the crude in the middle relative to one another. Okay, thank you for watching, and I will see you on Monday's podcast.